What's up, everybody? December 1st, Tuesday. Big news. I got big news. I just became a grandpa. Yesterday, my granddaughter, Sophia, was born. So I'm a first-time granddad. Kind of weird wrapping my head around that because I don't feel like a grandpa, but yeah, that just happened. So it's very exciting news, and I'm very happy about that, and I wanted to share it with all of you. All right, let's talk a little bit about what's going on. Folks, I do not see anything really negative in the fiscal flows. I mean, first of all, overall spending is like through the roof. And even the tax flows, which I've been talking about, like corporation income tax flows, you know, the year-over-year differential has narrowed a little bit. I mean, it's still positive over last year. The differential has narrowed, but it's stabilized. It's not falling. And individual income tax flows, I mean, they're like accelerating higher right now. So between just this massive amount of spending, which, you know, that's just a huge transfer to incomes, and with the corporation income tax flows just maybe showing a slight deceleration in the economy, but nothing like serious, nothing acute. I don't think we could really expect any sort of a sizable correction. And actually yesterday's 300 down or 270 down in the market, that might have been the little pause for now. I think we have to wait until the Biden administration gets put in place. I mean, we're starting to see more of his economic team, and you know, they lean kind of in the deficit hawk direction. I'm not saying that like they're extreme debt phobes or deficit hawks, but it's not like he's populating his economic team with MMT people. I mean, he's not. All right, like a lot of these people have backgrounds or have made comments or written things in the past which are critical of high debt levels. So, I mean, it leans in that direction, but again, we won't know until actual policy is presented and then implemented. So, I mean, right now, everything looks really positive. Everything looks very strong. Yeah, we had a little bit of a slowdown in the economy, and I think that's reflected in the corporation income tax flows, but, you know, I think the market's going to do fine. Now, one thing I want to point out has been the dollar decline, and that's going to be ongoing, and I think it could actually pick up some momentum because you're starting to get into technical levels, like people who follow charts and that sort of stuff, especially the longer term charts, and a lot of these managed funds, they're technically guided, okay, like they depend on chart patterns and this and that. So you might see a pickup in the selling based on these technical levels getting breached. But, you know, I've been telling you guys this for years, that the underlying fundamentals for the dollar are bearish. I mean, it's not like they're crazy bearish, because the Fed's monetary policy, and I've explained this before, the Fed's monetary policy of asset purchases and low interest rates or zero rate, that's actually bullish for the dollar. So, like, you know, you got two opposing forces there, one being a little bit stronger than the other, and that the stronger force is the fiscal deficits and the trade deficits, which are kind of outweighing the bullish effect of monetary policy. Monetary policy is kind of deflationary. You know, low rates, as I've said many times, rate setting is price setting, because the cost of credit is reflected in the cost of all goods and services. So when the central bank lowers rates, it's lowering the general price level. So, you know, we have a mild downtrend in the dollar, but it's kind of perennial because we run these deficits, budget deficits and trade deficits annually. And the budget deficit is just, you know, it's on an increasing trajectory. And I think right now, and look, we're only what? We're getting into December, so we're in the third month of the fiscal year. We're already very close to a 500 billion deficit. All right, and I think what did we end up with last year? Like a 1.5 trillion or something like that. I mean, we could easily hit that again. So that's the rundown. Oh, I forgot to mention today I sent out the analysis and the breakdown of the CFTC's commitment of traders data. There was some interesting developments in gold and silver, all right? Interesting developments in oil. You might want to get that. So go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Remember, I may do away with the 30-day free trial. I'm seriously thinking about it, and that would start in January. So you have all this month, and the price is going up in January to $500 a month. It's worth it, believe me. All right, everybody. Have a good one. See you tomorrow. Bye-bye.